Today's Tuesday, December 13th, and it's 9:25 p.m. Eastern Time. And this is a trade recap of a position I'm currently holding involving Walmart, ticker symbol WMT. And today's closing price is $147.49. And for the trading session, it was down 53 cents. So what I'm showing here on the trade dashboard is I do have a position involving the December 16th expiration date for monthly option contracts, which is expiring in 3 days. And the details of the trade is specific to the $146 strike, which is essentially saying that I'm anticipating a move to the downside from its current price right now. So I'm anticipating at least $1.50 move towards the downside by the close of this Friday. So I did pick up 5 contracts, and all 5 expire worthless in 3 days. My average price per contract, it's about 92 cents or $92 per contract. And the trade is down to about $75 per contract. And overall, the net loss for today is $84.50. And if I click on the trade confirm, I picked up the first 3 contracts at $98 at 3:13 p.m. So within the hour before close, I started entering or scaling into this position. And when price started falling, I added 2 more contracts, one at 89 and the other, or the last, at $74. And these 2 contracts reduced my average cost, not so much, but still, it brought it down from $98 to about $92. So with that, if I just break out the calculator, so I picked up, my average cost is I'm going to round up to $92, and I picked up 5 contracts. So not including commission, this is a $460 trade to holding these contracts for the next 3 days. So this is equal to holding 500 shares of Walmart for $460. Now the alternative is to actually short these shares, right? But that would require a whole lot more capital. So if I was to use today's closing price, for example, of $147.49, and I was to short 500 shares, the capital requirement or margin would have been $73,745 for 3 days. That's too much of a risk and too much capital. And I thought the more efficient way was just to limit my risk and just commit less than $500 into this trade. I can always close out the position early and salvage as much as I could if the trade went against me very quickly. So when dealing with options, it's you have to accept your losses before entering the trade. So the reason I entered this position is that if I click on the chart tab, so each candlestick here is a day's worth of trading. And this red vertical hash line is the December 16th expiration. So I need price to fall below $145.02 because that is the contract's break-even point. So I need price to pull back. So the reason why I entered a short position is because price, like once price reached its high over here of around $153, it's starting to lose momentum, and I'm anticipating that price could end up somewhere back around $138 heading into January. Maybe by mid-January or early January, Walmart will be back around $138 because of this losing momentum. We might see a bounce here. And also it gives Walmart the opportunity to fill this gap, right? Because the market is efficient, and eventually, at some point in the future, whichever direction the price is trading, price will reverse itself to fill this gap. So, and nobody knows when that's going to happen. It could be a few days, it could take a few weeks, it could even take a few months. But because it's losing momentum, that to me is increasing the probability that price could fill this gap. I'm not saying it's going to fill it by Friday, but it's something that price may gravitate towards heading into expiration Friday. Also, what I did was I was looking at this at the weekly time frame, and we could see that there were two consolidation phases before breaking out. So each candlestick represents a week's worth of trading. So here we have one consolidation before price running up, and then when price did run up, there was a second consolidation phase where price just went sideways for several weeks. And then it broke out to its current trend right here. But overall, I'm looking at this candlestick, the week of October 17th, as the anchor point to the regression channel, because this is the last candlestick, or this was the first candlestick that led to the breakout. So I'm using that as a significant week or time frame. So I'm going to pin this regression channel. And I can't swing this channel any lower. Like, I can swing it over here like this, but I can't drag it any lower than this. So this to me is the current market structure for Walmart, where the purple band represents resistance, the blue band represents support, the gray band represents both support and resistance. So if I switch back to the daily time frame, we could see that playing out just as the way it's textbook definition of a channel respecting its support and resistance levels. So here we see price come up, get rejected multiple times against this gray band. It consolidates, right, gaining momentum, creates this gap just to get above local resistance. And then momentum carried it here, and then finally getting rejected 1, 2, 3, 4, 5, 6, 7, at least 7 times as price tried to run higher, and each attempt failing. So now price is held at support. So because this candlestick from my perspective, is an anomaly due to today's CPI numbers. But even though price ran up pre-market, during the trading day, Walmart continued heading down. So if I switch over to the 1 hour time frame, right? So all of this here started yesterday. So maybe the market was sensing a positive CPI, and then pre-market, this candlestick right here is at 8 o'clock in the morning. So all of this was before the market started trading. And the CPI was announced 8:30 this morning, I think. And when the market started trading, equities across the board just started fading to the downside. And heading into tomorrow, I think the Fed is also speaking, but they're not speaking until sometime in the afternoon, right? So we could possibly see Walmart, as well as the rest of the market maybe, just consolidating again, stalling, waiting for the news to come out before price could either run up to retest resistance, or price could break down, retest support. And as what I showed in the trade tab, I did take a bearish position. So I'm anticipating Walmart to possibly retest after tomorrow's Fed announcement. So that could possibly play out. I mean, no one really knows, but based on my assessment, that's why I decided to go with a bearish bias trade. So, with all of that said, that is the current status of this trade and the rationale for my entry. I'm anticipating a continuation to the downside. Price may ultimately break below support. But then again, price could get respected at the support level and bounce. And, at that point, then my trade is busted. I'm going to close out the position and protect as much capital as I could. So I'll pause it here and I'll pick it up maybe tomorrow or Friday. So I'll be back. So a quick update. Today is Thursday, December 15th, and the stock market will be opening in about 20 seconds. But looking at the 30-minute time frame from Walmart, price is down here at 145 approximately. So this is all pre-market volume, and if this stays, then we could possibly see a further downturn. So 5 seconds, 2 seconds. That's the market open, and now trading has started. So we can see that Walmart is trading at 145.93. So it's close to hitting the break-even point at 145.02. So it's running right back up. I'll probably get stopped out if price does recover. So yeah, so that's the opening market, and possibly get closed out. And if I click on the trade tab, the trade is still a push, kinda. It's down $12.50. Considering that tomorrow's the last day for the life of this contract, there's 1 day remaining. Let's see what happens. So again, at this point, because of the short time frame remaining, I thought I'd narrow my stop. So this could be a push. So I'll pause it again and pick it up in hopefully in a few hours. So I'll be back. So just a quick update. So price is still trending towards the downside. So I've modified my closing order to a OCO order. It's a one cancel other. So here's my take profit pegged to $2.25 strike price or option price. And here's my stop just in case there's a sharp reversal. I'll move it down to break even. But as of right now, it's almost, I don't want to jinx it, but so far so good. So I'll go ahead and pause it again, and then hopefully we'll see a better return next time. So I'll be back. And the trade is up $582 right now, of which it says the P&L for today is 742, but yesterday's volatility, I lost the difference here, so that's what I made up, and this is the full amount for the trade. And option contracts are now designated ITM, or in the money, so it's a profitable trade. And just to show, here's my position right here. So yeah, so the contracts are almost there. So let me just do a quick look. So it's right here. All I just want to see is a strong push right below 143.78. Chances are price could go even lower, but considering that these contracts expire tomorrow, I don't want to push my luck and carry it into the overnight session where crazier things could happen and the full trade reverses on me. So I would be fine closing it out at today at some point. So yeah, so price is now trading at 143.98 right here, 143.98. So, and we need to cross 143.78. So another 20 cents. So I'll pause it again and I'll be back. So quick update, I am out of the trade. Price fell below. Unfortunately, I wasn't able to capture it. I thought I did record it, but I went back and it didn't save. So I'm redoing this again. So the price did break below my target price. I am out of the trade. My orders are no longer appearing on this page. And if I toggle over to the trade window, my quantity is 0. I'm flat. I'm out of position. So what happened was, just to do a quick recap, I picked up 5 contracts at $92 per contract. So out of pocket, it cost me $460 to get into the trade. And I sold the 5 contracts at $2.25 or $225 per contract times 5 contracts. So the P&L is showing $11.25, but if I subtract the $460 that I used to get into the trade, overall profit was $665. And if I click on the monitor tab, yep, so right here, here's my exit price of $225. So this was the filled order. And all of these orders were canceled because I was adjusting the take profit prices. But this is the order here that was executed at $225. So it hit my target price. So overall, this was a good trade. Again, this was like a position that I saw happening the other day. So time of trade is less than 2-3 days. But if the trend does continue heading towards the downside, I'm looking at 142 as a potential area for price to keep heading down to. Now, these contracts were expiring tomorrow anyway, so I'm okay with getting out of this position, and we can see that price is now turning green. So this could be another area where price could bounce. So at least I was able to get out of the trade before price reversed on me. So yeah, so until the next setup, I will end it here, and I'll see you on the next one.